Covering the economy now as people look to make money off their investments. One that seems to be having a little bit of trouble lately is gold. SK Wealth Management Investment Director Matthew Nealon joining us in studio this morning. All right, good morning to you, Matt. Thanks for coming in.
Thank you.
Gold. Let's talk about gold. We all know about it. We all know what it is, but it's still kind of a mysterious type of investment. What's the state of investing in gold right now?
Yeah, gold's a very interesting situation. One, its spectacular run is caused by a number of things. I'll touch on three things. One, the economic climate. It's been a rough period. I mean, we've had wars, we've had the financial crisis, the Great Recession. The governments have had to step in and do dramatic things in order to protect the balance sheet. And that's led to economic uncertainty, and people flock to gold during uncertain times. Also, you've had a situation where the emerging economies are developing. China, India, Brazil, Indonesia have been growing very dramatically, and those countries love to buy gold, so people have been buying physical gold. But I think another thing that's really interesting is the development of ETFs, exchange-traded funds, which are like mutual funds but trade like stocks. And they've created ETFs that you can buy gold, and it's tied to gold bullion, which is unusual because 15 years ago, how hard was it to buy any form of gold, other than jewelry or occasional gold coins? Now you're able to just buy, average investor can just buy it just like they can buy a stock.
All right, so as we've seen the stock market lately, it's really been on a roll. How does that translate to gold? Are they kind of along the same path, or is it completely opposite direction do they go in? How does that work?
Yeah, gold typically is a hedge against uncertainty or bad times. So typically you'll find when the stock market is booming that gold will not be booming. You look back at 2008, when things were collapsing, everything collapsed. It was an unusual situation. Gold went down 35%, which a lot of people forget about in 2008. But typically when you have a good economy, that means your dollar, the value of your currency is going up, and that's usually not a good environment for gold.
As far as investments go, folks are always looking for safe investments, mutual funds, stocks. Where does gold fall in that category as far as, is it a safe one, kind of a long-term thing, quick fix financially for you? How does it rate?
Yeah, gold is, the problem with gold is basically people have started to look at it in a different way. I think what's happened is we came out of the tech boom and bust, and then we came out of the 2008 Great Recession, and people lost a little bit of their I would say discipline as far as investing goes, and thought of gold as kind of that, no pun intended, get rich scheme.
Right.
And really what it is, as I said, it's a hedge against uncertainty. And people should look at it not as something that's always going to go up, but look at it as in times of uncertain times, which we're in. We're in economic environments of slow and uneven growth, which leads to volatile markets. So it can be a way to actually protect against uncertainty, which is the hardest thing to predict.
All right, Matt, thanks so much for coming in. Really appreciate it.
All right, thank you.
Great advice. For more on how the gold markets are currently faring, just head to our website, foxprovidence.com.